Hello everyone, welcome back to our Accounting 210. In this video, we continue with the chapter 7. I put our handout on the left side. I put a blank paper here so we can do more practice. So last time we stopped at the break-even point. The example, we introduced the concept of being break-even, right? It just means you don't earn money, you don't lose money, so your operating income will be zero. So I said I want you to do the practice by yourself. I'm not sure whether you did it, yes or no. But today you can see I even put the my blank white notebook here, so we can do all these 4 questions together. Okay, the first one said how many units you have to sell so that you can reach the break-even point. We said there are 3 different methods to do. We go from the very basic way. Okay, we go from the very basic method. So now I'm working on the first one. So we work on the first one, part 1, right? So we said how many units you have to sell to reach the break-even point. I use the break-even point. I just said, I don't know. I don't know how to get this answer, but I know the format. So the revenue minus all the variable cost gives me contribution margin minus all the fixed cost gives me the operating income, right? I know this format, and then I want to put my information in this format. My revenue, each one selling price is $35. How many units I sold? That's the question. It asks you how many units. When you learn the math, right? When you learn the high school, even college, I believe the professor told you, if you don't know anything, you put that one as X. So we said, I don't know how many units. I don't know how many units, but I said, hey, I need to sell X units. Sorry about that. I need to sell X units, right? So we will just to solve this unknown variable is X units. Okay, so I said I need to set it as X units. Okay, now let's continue from this side. My variable cost, each one is $21. Minus each one is $21. How many units? X units. So my total variable cost will be 21x. My total revenue is 35x. My contribution margin now will be how much? Let's say I believe it's 14x, right? 14x. Am I right? I believe I'm right. And then my total fixed cost is 7,000. My total, and what is my operating income? Should be at break-even point. It should be zero. Okay, so now how to solve this question is 14x minus 7,000 equals to 0. 14x equals 7,000, and then x equals 7,000 divided by 14. I got the number. I want to hear your answer, whether you did this yes or no. And then what's the answer I need? I need help. I need your help. I need to get my notes ready. How many units? The unit is 500 units. Did you get the answer? Yes or no? It's 500 units, right? So we got this one. So this is 500 units. This method will be the first one. It's called the income statement approach. So how do we get these 500 units? We go from the income statement. We go through the income statement. Okay, so you will say, what is the shortcut? I like a shortcut. How do you get this shortcut? Is I tell you the equation here, right? I tell you the equation here. How do we get our shortcut? If you want to get the break-even point using the unit, then the unit equals to your fixed cost divided by contribution margin for each unit. So your fixed cost will be dollar amount. Your contribution margin for each unit is also dollar amount. Then you will cancel the dollar amount and get the unit. The third shortcut is if we want to get the dollar amount, we should use the ratio. then the ratio will be fixed cost divided by contribution margin percentage. Contribution margin percentage. Remember, your fixed cost is dollar amount. There is no dollar amount. So if you do that, you will get the dollar amount. You will get a dollar amount. So let's verify whether the shortcut works or not in our example, okay? So we said how many, if we want to use the shortcut, we said we calculated it's 500 units, but I want to use the shortcut, okay? So if I want to use shortcut, I want to get this unit directly. Remember, the formula is the break-even point. The break-even point in the unit is your fixed cost divided by contribution margin for each unit. You say, oh, that's kind of look familiar. My fixed cost is 7,000. My each one contribution margin is 14. Wait a minute, right? Both their dollar amount. Both their dollar amount. Wait a minute. I got 500 also from here directly, the same as this 500. Even the equation is very similar. It's 7,000 divided by 14. 7,000. Oh my goodness, I'm definitely correct. I'm definitely correct. Yes, you are. Yes, you are. So from this question on, you know, you can just memorize this formula and then do it very quickly in 1 second. Get the total fixed cost, get the total fixed cost, get your contribution margin for each unit. So I want to put a note here. Students are so happy. Say, I'm done, I'm so good. Not enough, right? So this has to be your total fixed cost in dollar amount, the total fixed cost. This has to be contribution margin for each one. How do you get this one? It's selling price minus your variable cost for each one. So you get your contribution margin there. Yes, you're right. Once you get the numerator, you get the denominator, you can get the units of break-even point directly. Okay, very exciting, right? Next one said, how many, what's the dollar amount you need to generate? You can do this traditional way by yourself, but I want to practice the formula with you. Now it's asking you the dollar amount. We said the dollar amount of break-even point equals to total fixed cost is dollar amount divided by contribution margin ratio, divided by contribution margin ratio. So how do we get our contribution margin ratio? Contribution margin ratio equals what? Equals your contribution margin for each one divided by your selling price, right? Or total contribution margin divided by your total revenue. So in this example, our contribution margin for each one is $14. Our selling price, I believe, is 35. So we get the contribution margin ratio is about 40%. It's about 40%, okay? So once we got that one, we got our denominator, then we use our total fixed cost. Our total fixed cost is 7,000 divided by contribution margin ratio 40%. We get our break-even point in dollar amount has to be 17,500. 17,500. You said, I want to double check it. I said, go ahead. You already got your units is 500 units, right? We said each one selling price is $35. Then if you do that, you will get your dollar amount also has to be 17,500. You double check yourself there. How do you interpret that? That means when your total revenue is $17,500, you thought you earn money, but actually you don't earn anything because all of this is $17,500. It goes to cover your variable cost and goes to cover your fixed cost. So in that moment, your operating income is actually zero. Okay, Do you get what I'm trying to say? So you need to know if using the traditional way, whatever it asks you, just set it as X. You know, you can go each step and get your X solved. Or if it asking you break-even point in units, then you have to use a dollar amount for the fixed cost, the dollar amount for the contribution margin for each one. If it asks you break-even point in dollar amount, what's your revenue has to be so that your operating income will be 0. If this is the question, you use your fixed cost divided by contribution margin percentage. Okay, so now we got these two parts, and then the part 3 and the part 4 is one way ahead after getting the break-even point. What's the difference? Now it's not asking the break-even point, but you want to earn some money, right? You want to get 4,900 as your operating income. What can we do? First way we can work on it is we said now your operating income is not 0. Okay, now your operating income is not 0. So one way is you change your operating income to 4,900. Okay, you change it to 4,000. So now 14x minus 7,000 will not be 0, but will be 4,900. If you do the math here, you can get what? You can get your total, your x will be, so your 14x minus 7,000 equals to 4,900. 14x will equals to 13,000, I believe, $900, and then if you do that, your x will be 7,000 plus your 4,900 divided by this $14, and then you get your units. In this situation, has to be 8,050 units. Has to be 8,050 units. So this is the case when you want to get operating income, you have to sell more units. You have to sell 8,050 units to get your operating income as 4,900. Okay, you said, is there any shortcut too? I like shortcut now. Is there any shortcut so I can just, do the numbers very quickly and get the answer immediately? Fortunately, yes, we do. Yes, we do. So what is the shortcut there? What is the shortcut there? So if there is any desired operating income, you can find out actually your denominator is still $14 over the contribution margin. The only change is you changed the numerator. You changed the numerator. The numerator was just a fixed cost. Now the numerator will be fixed cost plus your desired operating income. So if this is the case, the units will equals to your fixed cost. That's not enough. We want to get some operating income. So your numerator has to be fixed cost plus the operating income, and then divided by your contribution margin for each unit. Similarly, if you want to get the dollar amount for the revenue, then the formula will be fixed cost plus your operating income divided by your contribution margin percentage, You said, oh my goodness, Professor, we are just talking about the first part of chapter 7. There are so many formulas. I don't think I can memorize all of them. I would say memorize this, that's enough. Memorize these two, that's enough. But how about the break-even point? You give us the formula here, right? You also give us formula on the first page. So now you give us the two more formulas. So which one should we try to memorize? I said memorize these two. Why? Because when you have the break-even point, your operating income is 0. Your operating income is 0. That's why we just need to use a fixed cost divided by your contribution margin. Fixed cost divided by contribution margin percentage. Because that's 0. You plus 0, right? But so if you memorize this formula, if it's break-even point, then you add 0. If it's not break-even point, you add the whatever your desired operating income is. So let's check our formula, right? Let's check our formula. I'll put my work here. We use this traditional way to do the practice. We found out it should be 850 units, but I say I want to just the shortcut. So if I do the shortcut, then the unit will be my fixed cost plus my operating income divided by my contribution margin for each unit. My fixed cost is 7,000. My desired operating income is 4,900. And then I divided by my contribution margin, which is how much? My contribution margin, which is $14. So now I also get my units has to be 850 units. It's exactly the same as using the income statement method. It's exactly the same as using the income statement method. How about the second part? How about my dollar amount? If I want to get the dollar amount, it's fixed cost plus operating income divided by contribution margin percentage. My fixed cost 7,000 plus my desired operating income 4,900. I divide by my contribution margin 40%. I get my total sales has to be what? Actually, I need your help. I need your help. I believe it's 29,750. Well, I cannot read my notes, unfortunately. So it has to be, sorry about that. You know, your professor said, sorry. Okay, let me do it. I'm Asian, but I'm not good at math. So, okay, so I got this numerator divided by 0.4, 29,750 $29,750. Okay, so how do we interpret this? When our revenue is 29,750, our operating income is 4,900. You will ask me, oh my goodness, where are the money goes to? The money goes to cover our variable cost and cover our fixed cost, right? Okay, so I think I talked too much, kind of joking around, and then I apologize because I tried to put just a note in the Word file, but the pen doesn't work well. So I have to have another separate part to write the steps. Hopefully it doesn't bother you too much. Let me know if you don't like this format or, you know. Okay, so I summarize one more time. In this video, we talk about break-even point. How do we do the numbers? 3 different methods. First, you can use the traditional income statement. Whatever it asks you, set it as X. Second is if we use the shortcut, then what's the formula? And then if it asks about the dollar amount, what's the formula? After getting the break-even point, we said that's not enough. If we want to get some operating income, so your numerator has to be fixed cost plus the operating income, and then either divided by contribution margin for each one or divided by contribution margin percentage to get the units or to get the dollar amount. Okay, I think I stop here. Next time we talk about learning objective 3, and then we talk about something. We are halfway done with chapter 7. I hope you still feel good, and then I see you next time. Let me know if you have any question. Thank you.